Welcome back to Iraqi Dinar Alert. Today, we're diving deep into a question that has captivated investors for years. Is the Iraqi dinar a long-term investment or just a high-stakes, risky bet? For years, the dinar has been a hot topic, especially for small retail investors dreaming of a once-in-a-lifetime opportunity. You've probably seen the stories circulating on social media and investment forums, tales of a massive revaluation, overnight millionaires, and Iraq's hidden economic potential. It's an exciting narrative, but what's the reality? Is the Iraqi dinar a smart, long-term move, or is it more like buying a lottery ticket? To get to the truth, we need to look past the hype. We're going to examine Iraq's economy, its currency system, political stability, and what its future realistically holds. First, let's get a clear understanding of the Iraqi dinar itself. The dinar, or IQD, is the official currency of Iraq. After the 2003 war, the country's economy was devastated, and the dinar's value plummeted. Ever since, it has remained relatively weak, trading at a very low exchange rate against the US dollar. The core belief driving all this speculation is that if Iraq's economy fully recovers, the dinar could skyrocket in value. This hope is the entire foundation of the long-term dinar speculation movement. So why do some investors see so much long-term potential? Let's break down the optimistic arguments. Point number one is Iraq's incredible wealth of natural resources. Iraq holds one of the largest proven oil reserves in the world. Oil exports are the absolute backbone of the Iraqi economy, bringing in billions of dollars in revenue every single year. The argument here is simple. As oil production and exports continue to grow, Iraq's economy will strengthen, and that strength could eventually support a much stronger currency. The second point is economic reconstruction. Over the past decade, Iraq has been slowly but surely rebuilding. We're talking about essential infrastructure like roads, power plants, housing, and public services. Long-term investors believe that as this reconstruction continues, it will lead to greater economic stability and attract more foreign investment, creating a positive cycle of growth. Third, there's Iraq's strategic location. Geographically, Iraq is perfectly positioned as a crossroads between major markets in the Middle East, Asia, and Europe. Some analysts suggest that if the political situation stabilizes, Iraq could reemerge as a key hub for regional trade and commerce. And finally, there's the psychological appeal of its low cost. This is one of the biggest hooks for new investors. You can buy millions of dinars for a relatively small amount of money. This creates a powerful illusion of massive potential gains. If each dinar just goes up by a penny, you make a fortune, right? It feels like getting in on the ground floor, even though currency valuations don't work quite the same way as stock prices. Now, that's the optimistic side of the coin. Let's flip it over and look at the reality and why the Iraqi dinar is widely considered a very risky proposition. Despite all the hopeful arguments, there are several serious risks that you absolutely must understand. First and foremost is Iraq's controlled currency system. The Iraqi dinar is not freely traded on the global forex market like the euro or the Japanese yen. Its value is tightly managed and controlled by the Central Bank of Iraq. This is a critical point. It means the currency doesn't fluctuate naturally based on supply and demand. The government essentially sets the price. This control severely limits the possibility of the kind of sudden, dramatic appreciation that speculators are hoping for. The second major risk is political instability. This is no secret. Iraq continues to face significant political challenges. We're talking about internal conflicts, government instability, and constant pressure from neighboring countries and regional politics. This kind of political uncertainty is a massive deterrent for serious foreign investors, and it directly undermines confidence in the country's currency. A stable economy needs a stable government, and that's something Iraq is still working towards. Third, let's talk about the revaluation, or RV. This is the holy grail for dinar speculators. Many promoters talk about an impending event where the dinar will suddenly jump in value overnight. But in reality, such massive reevaluations are extremely rare. They typically only happen in conjunction with major, sweeping economic reforms. Most importantly, there has been no official confirmation from the Iraqi government or its central bank that a massive revaluation is planned. It remains pure speculation. And fourth, there's the economy's heavy dependence on oil. Iraq's budget is almost entirely reliant on oil prices. When global oil prices fall, government revenue plummets. This creates huge budget deficits and puts immense stress on the economy. This volatility makes any kind of steady, long-term currency appreciation very uncertain. A single commodity economy is inherently fragile. With these risks in mind, let's bust some of the most common myths that circulate in the dinar community. Myth number 1. The dinar will revalue to $1 or more. For the dinar to reach such a level, Iraq's economy would need to be on par with major global economies. Its total economic output would have to multiply many, many times over. This is highly unrealistic in the near or even medium term. It's simple economic math. Myth number 2. Other currencies did the same thing. You often hear comparisons to the Kuwaiti dinar, which revalued after the Gulf War. However, this is a flawed comparison. Kuwait's economic structure, its much smaller population, and its monetary policies are completely different from Iraq's. What worked for one country under a unique set of circumstances is not a blueprint for another. And myth number 3. There are secret plans for the revaluation that are being hidden from the public. This is classic conspiracy theory thinking. In the modern global economy, currency values are determined by fundamental economic data, transparency, and policy. Central banks don't and can't hide massive revaluation plans from the global financial markets. It just doesn't work that way. So this brings us to a crucial distinction: long-term investment versus speculation. A true long-term investment is typically backed by strong fundamentals, market transparency, and a history of predictable growth. Think of blue-chip stocks or government bonds. A speculative bet, on the other hand, relies entirely on uncertain future events and a high degree of hope. Based on everything we've discussed, the Iraqi dinar falls squarely into the category of speculation, not traditional long-term investing. While there is certainly potential for upside if Iraq achieves lasting stability and successful economic reform, the risks are enormous, and the timeline is completely unpredictable. It could be years, or it could be decades, or it could never happen. So who should even consider the Iraqi dinar? Honestly, it might only be suitable for a very specific type of person. First, investors who fully understand and are comfortable with high-risk speculation. Second, people who are investing very small amounts of money, what some call casino money, that they can afford to lose completely without it affecting their financial well-being. And third, those who are definitely not relying on this for their retirement, their kids' college fund, or any form of essential financial security. It is absolutely not suitable for conservative investors or anyone looking for stable, reliable, or guaranteed returns. If you look at what professional financial experts and major institutions say, the picture becomes even clearer. Most do not recommend the Iraqi dinar as a serious investment. Mainstream investment portfolios are built on assets like stocks, bonds, real estate, and diversified funds. These are assets with historical performance data, regulatory oversight, and liquidity. The dinar lacks all of these key features. It's not liquid, it's not transparent, and there are no clear long-term monetary policy signals to guide investors. This makes it a very weak candidate for any serious financial planning. So let's circle back to our original question and give you the final verdict. Is the Iraqi dinar a long-term investment or a risky bet? The honest answer is, It is a high-risk speculative bet, not a reliable long-term investment. While Iraq does have genuine economic potential thanks to its resources and strategic position, the challenges of political instability, economic dependency, and a controlled currency system far outweigh the certainty needed for confident long-term investment. For the vast majority of people, the Iraqi dinar should be viewed as a speculative gamble, if it is even considered at all, and never as a cornerstone of your financial future. Thanks for watching. We hope this clears up some of the confusion and hype surrounding the dinar. Remember to do your own thorough research before making any financial decisions. Be sure to like, subscribe, and hit that notification bell for more updates from Iraqi Dinar Alert. We'll see you in the next video.